Good morning. It is Monday, June 3rd. And what a day, Friday. We'll look at the heat map. This is the heat map of the S&P 500. It went crazy, and we got a lot to talk about. We'll go over GameStop. We'll go over NVIDIA. We'll go over AMD. We'll go over some other plays like Boyle, some GLP1 stuff. We'll go over all of that. Be patient because there is a lot. I will go over one podcast that I think is a masterclass that I listened to this weekend. And of course, there's a Ross Cameron Warrior Trading video that I'll include in the newsletter. So here's the heat map. Amazon, obviously big red. AVGO down 2.6%. I do think that Broadcom, by the way, is a good way. I do hold it personally. But you can see computer here, ANET, HPE down. There's some red in here. CEG under utilities. Costco was down, but there's some really, really bright spots in this one. Where did we wind up? The Qs, and I want to point this out. Here's the Qs. We had these two big candles on Friday, and we've talked about how here in the MACD's crossing down, and we're going down. We haven't seen that huge button hook, but we did see weakness starting on Thursday where you didn't have confirmation anymore. Was that the sign? Well, it came down Friday morning, was nuts. But what I want to point out to you is this A+ setup that I have in Trendspider, and we'll go over it for the Qs right now. We'll run it because Friday's Valley, if you want to talk about it, was enormous. And you can look at this. This was Friday pre-market where we were up at 454. That 449 is your support level. That's your support level. We broke down underneath support. And so while everybody was thinking, oh my God, we've killed, the market is going to die. Remember that MACD was super low on the 4-hour. And we came right back. I mean, this was an enormous move. We've continued it today. I mean, the Qs are expected to open up almost 1% at 0.74. So we've continued this rally. We gapped up and we've continued the rally. Now, will you fill this gap? Don't count these candles. That's 8 o'clock candle and an 8:25 candle. Just ignore those. Those are anomalies in the data. But what you want to see, look at that volume at 15:55 on Friday. That was enormous. You had confirmation. So if you had this 5-minute setup, you were all set up for everything. And again, the heat map worked out well. Now, what I want to show you is that Friday was absolutely nuts. Let's say you wanted to retire on Friday. How would you do it? You put SPX 5245 calls expiring in the next hour, okay? That was what they did Friday. SPX rallies 1.5% from the lows. The S&P doesn't rally 1.5%, especially from a midday low drop. It was enormous. Congrats to 1 cent to $42.56. If you put $2,000, you made $1 million on Friday. Now, there is no way any of you degenerates should be putting $2,000 into zero DTE options where you are down 1.5%. There is no way you should be doing that. But if you YOLO, you may have done it. I would not recommend it. But this chart shows you that it's just a crazy, crazy buy the dip market. Again, we are in a bull market. When we look at the 4-hour and we go back to the 4-hour on QQQ, well, let's just go back to the 4-hour algorithm here, and we'll run it because I don't want 4 hours in the with the shaded areas or after hours. I like to just look at the hours that the market's open. And when you look at this, Bollinger Bands cinching up, but we're on our way down. We will have a pullback, and I don't know that this pullback is going to be this week. We may regain confirmation. Notice the algorithm, even with this pullback, has not gotten you down. You can't time the market. You can't. You're going to play in this middle ground. All of these algorithms are going to play in this middle ground, and that's what you want. You want to protect yourself from the downside, but you also want to protect yourself from that enormous drop when you get to the upside. This is not an enormous drop. This is just a normal pullback. when you look at the weekly, and you see that, yes, we are acting almost exactly like this. The problem is, with the weekly, we may have just had a cross up on the MACD on the weekly to, again, further push us higher. The RSI quickly pulled back. You can see, look, it pulled back there, pulled back here. And what happened? You get a little bit of a rally, but you might pull back. This sideways move is what I would expect from the Qs and the market going into the summer. Do we expect another October pullback? Most likely, yes. If we don't get rate cuts, this market is expecting some type of rate cut because things are starting to get stretched in the market. So you can play these kind of options. You can do what you want. The market is going nuts because Roaring Kitty has, nobody's confirmed it, but $65 million in GME calls. GME calls. Now, how do you trade GME? Well, you don't trade it on the 4-hour because the 4-hour would be absolutely nuts. This is a highly volatile stock. You don't want to trade something like this on a 4-hour algorithm. But the 4-hour algorithm did make you 104%. It hasn't gotten you back in. But what you do is when you sign up for Trendspider, I give you these algorithms. And this is an A+ setup. I want to reiterate, I am very confident on the entry. I am not so confident on the exit. But with this one, it worked. So on Friday, you bought in at 22.85. Kind of seemed harmless. Last couple of ones were less than 1%. Again, it's less than 1% losses. They just kind of protect you. If you had that big drop, then it protected you from that big drop. Now, this one got you in at 22.85. It just got you out with a 76% gain. You want this algorithm? What do? You go to my link tree, linktr.ee/daily-stock-pick. You click that top link. You get over here to Trendspider. You must sign up for Trendspider. To get these algorithms are hosted in Trendspider. It's not something I'm going to give you. Just, go set it up in your own program. No. The algorithms are set up specifically in Trendspider for a reason. What do? I send you links. So what you sign up for this, you pay, you send me a screenshot. You go back to Linktree because I've got my email address up here in the upper right. You send me a screenshot that you signed up. I send you back a welcome letter with all of the links. You get the 4-hour algorithm. You get the 65-minute algorithm. You get the 5-minute algorithm. You also get all the watch lists that I have, which you can scan through because I give you my custom scanners. And as a bonus, I send you to a bunch of YouTube videos where you can learn charting basics. And I really try and help you get into this because, again, Trendspider is a bit of an overwhelming program. I don't use half the things in Trendspider that it has the capability of doing, and they continue to make it even better. It includes ChatGPT. If you want to write an algorithm yourself, you tell the algorithm what you want to do. Say you want to, enter in when the RSI is under 50 and the MACD is under the oscillator. Or the MACD is crossing up on the signal level within the next few candles. You just tell ChatGPT that's what I want to do. It writes it for you. So it's such a good program. I can't tell you enough about how good it is. But Roaring Kitty, again, you can read about it here in Seeking Alpha. GME is not one you want to hold on to. This is one you want to trade. That's why I provide you these tools to trade with. And all of the meme stocks went rip-roaring higher. And I love Roaring Kitty. I love that he's just holding it in the face. This isn't insider trading. He didn't do a damn thing. It's not pump and dump. He's basically putting up memes. So what's Gary Gensler at the SEC going to say? Oh, you put up a meme of a kitty and that meant GameStop and you pumped and dumped? No. Dude is just playing it very, very smart. And we don't know that it's him. He could have sold his Twitter account. And some hedge fund could be playing games with it. But are they playing games? No. Just figured out a way to make money. So, but again, the 5-minute chart shows you how QQQ dipped under, was a buying opportunity, showed you how Roaring Kitty, you could play GameStop with that one too. I want to reiterate, the entrance, super, super solid. So you have to sit there and watch the chart. I'm not confident in the exit. The exit's just there as an example. You can customize it however you want. This is the week ahead. We've got some fairly big news, fairly muted today. Earnings. I like GitLab. I do like it. You got HPE, you got LULU, you got NEO. You do have CrowdStrike on Tuesday, and we'll go over a little bit of CrowdStrike too. LULU, I just went over a little bit. I'm not sure you can expect a bump from that one. That's going to be a little bit of a hard one. DocuSign, I actually own. Options trading volume moved higher in Robinhood. Most overbought stocks. You can see these. This is a great article from Seeking Alpha. Now, if you want this article, if you want this every week where you get set up for the week, then you go to my link tree and you use the second link, which is Seeking Alpha Premium. I give you a free 7-day trial, free 20% off, free 7-day trial. And you can get, basically, if you use my newsletter, then you just click on the links that I provide. There's no ads. There's no pop-ups. There's nothing. You just go and you read it. Again, it saves you time and it saves you money. So I like that. This is a good one. Now, one that I listened to this podcast. This is the Compound Podcast. And if you're looking for it, you're looking for the most recent one, Stephanie Link's favorite stock. Stephanie Link is a trader. She manages a portfolio, CIO of head of investment strategy at Hightower Advisors. She's on the halftime report on CNBC. I'm a fan of her stock picking thing. What I didn't know about Stephanie is that she was managing Jim Cramer's charitable trust. And she worked for Jim Cramer for years. I did not know that. They had some nice things to say about Cramer. I don't hate Cramer. I just think he's a horrible, horrible stock picker. But they actually provide insight into he's actually a really good stock picker, but he's a momentum trader. I mean, again, I couldn't believe that his investment trust, when she had it, had like 75,000 people who were paying like $500 to $700 a year. That's crazy to me. But one idea I got from this was picking 5. She said Jim Cramer would always tell her, pick 5 stocks that if they dipped 5% in one day, you would buy them. And pick 5 stocks. I think it's a great idea. I think that's the most brilliant idea I've heard. And again, it's from Jim Cramer. But I would tell you, if you don't have a watch list, set one up. Go to Savvy Trader and set one up. And if a stock dips 5%, and you have to have a story of that stock, it's a fundamental story. But if it dips 5%, you buy it. And you don't go all in. You don't go balls deep. You go just stick the tip in. Say you got $1,000 and you want to buy this stock. Well, it dips 5%, and you're like, oh, it's dipped 5%. Oh my God, I'm fearful. Well, no, you put $100 in. And then if it starts to go up, you add a little bit more. And that was the entire portion of my weekend newsletter. Managing your portfolio, watering your flowers, not your weeds. I gave 4 or 5 stocks, I think, of examples where I'm either pulling back or I'm adding to it. So you want to water your flowers, not your weeds. And that's the famous Warren Buffett quote. You want to, holding on to your losers is like watering your weeds, and cutting your winners is like cutting the flowers. You want to trim your winners at certain points. If you don't know when to trim winners, you can go over my the newsletter here, and you can look at this one. When to sell stocks. It's the most popular newsletter that I have. It was a collaboration with My Weekly Stock Pick. That's free. That's a free one right there. It's the most popular one. And you can view any of these. The actual newsletter that comes out daily, it is free for you. But I thought that was a great strategy, is find 5 stocks that if they dipped 5%, you would absolutely buy them, and to have the story along with it. I also love the story of Red Lobster, how it was sold. Darden, if you didn't know, Darden Restaurants used to own Red Lobster, and there was an activist investor who got involved, and they owned Olive Garden and Red Lobster. They said, hey, Olive Garden, you need to salt the water before you put your pasta in. And Olive Garden said, well, if we do that, our pans wear out more, blah, blah, blah. It was just, that's kind of the thought process of Darden. So they sold off Red Lobster because they couldn't figure out how to make money at Red Lobster. They sold it to a seafood canning company. So what did the seafood canning company do? They actually took the all-you-can-eat shrimp and made it a regular menu item. Now remember, Red Lobster used to have it once a season. I think it was once a year. They would have all-you-can-eat shrimp for like $14.99 or $19.99 or something, and you could come in and get all the shrimp you wanted. Well, it's interesting that a seafood company, a canning company, bought this. Because what did the canning company do? They basically, all the shrimp that they couldn't can, they said, you know what? Here, have at it, you monsters. The monsters who come in for all you can eat, have at it. They said, you animals, this is what you want to eat. You're absolute animals. Here, $19.99. We can't can this stuff. So here's the all you can eat buffet. It's crazy. Crazy. It was just nuts. That's how, by the way, these restaurants are run. And so I argue, and I agree with Josh Brown, there is a middle restaurant that is an interesting play. And I don't like it because I think they're cutting costs, but they're raising prices. And that's how you drive away that consumer. I think high-end restaurants are perfectly fine. I think, things like Chipotle with a $15 burrito, you're perfectly fine. People love, the casual fresh. I like that stuff. But something like a Red Lobster that just filed Chapter 11, it's junk. So make your picks, understand what you're doing. But it's all a theme. Middle of the pack. So you look at Dick's Sporting Goods, great earnings. Why? Because you can get Nike. You have your choice. It's a high-end, sporting goods store. You look at something like, Under Armour, just got killed. You look at Lululemon. Lululemon, which has the high-end customer, but all of a sudden it's too expensive, and we can find some other stuff that's a little bit cheaper. It's getting killed. So you want to make sure, and I think another point that they made too was software. I was going over it on the YouTube Live a little bit ago. Software as a service, in my mind, I think AI is going to take that. That includes Snowflake, that includes CRM, that includes Twilio. Some of those other plays, I think they might get killed. And the reason they might get killed is the Chamath Palihapitiya started a company called 8090. And what they do is they design software for companies that does 80% of what your current, $5 million a month, software package does, but it's a 90% discount because they're having AI create it. That's it. So I think it's interesting. It's definitely an interesting trade. Tell me we're in a bubble without telling me we're in a bubble. This is Gunjan Banjari. 7 of the top 10 most traded U.S. equities in May are penny stocks worth less than $1. That's kind of telling you, GME up this morning, telling you there's a bubble happening. Now, it doesn't mean you get out, because remember, a bubble is a chance to earn money. A bubble means you're on your way up. It just means you have to protect yourself on the way down. How do you protect yourself? The algorithm in Trendspider. This takes emotions out of your trade. Would you have gotten out Friday? Maybe. And all of a sudden, we're up 1%. NVIDIA, crazy move on Friday. We'll go over this a little bit. But would you have gotten out because it's a crazy move? I don't know. I mean, again, you have to stay. This is part of what the bubble is. Now, Tom Lee says, stick with what's working. GLP1 and AI, stick with it. He said, he's been more right than wrong. Yes, he blocked me on Twitter. He blocked me on Twitter because I think I promoted my newsletter in one of his tweets, and he's got a newsletter himself, so he's, afraid of the competition, let's say. I don't think he's actually afraid of the competition. I just don't think he wanted me promoting my newsletter on his Twitter account. But stick with what's working. GLP1, we'll go over those stocks, and AI. The biggest movers of the day, GME, obviously. Paramount Global, it rose 6%. I've said stay away from this one because the only way you're making money is actually with a takeover. And I think Sherry Redstone, who owns 77% of the voting stock, she's the one driving the bus. I don't like that. I don't like it. So I'd probably stay away from it. Now, NVIDIA, they're widening the gap. They announced yesterday at a conference they're in Taiwan, NVIDIA's next generation AI platform will be called Rubin. So they not only have a Blackwell coming out later this year where they will see revenues, they already announced their next generation, which is 2026. They are so far ahead. It is unbelievable. Again, so far ahead. Now, we all know that the stock split is coming up. This is, again, Gunjan said, stock splits have typically been bullish for companies which enact them. Average returns 1 year later are 25% versus 12% for the broad market. So if we go and we look at NVIDIA, I've said this before. I said if you can get this under 1,000 before this split. When does the split happen? June 10th. June 10th it happens. If you can get it under 100, I think you got a great buy. Now, what are we doing with this stock? It's up another 3% in pre-market. It is crazy. There are gaps all the way down on this. Now, where did you see it on Friday? It got all the way down to 1,069. 1,069. That was its low. And that's going to be the low. I mean, for this week, I can't imagine. You know, their dividend, which they upped, which is meaningless, by the way. They upped. You see the MACD crossing down. You see the RSI come down. It's going to bump up. So if you don't have exposure to NVIDIA, I would just get exposure to NVIDIA. It is crazy. The volume levels are nuts. The actual market cap is absolutely nuts. But it's just, again, they are so far ahead for the next few years. But I agree with Josh Brown, and I brought it up last week. If you didn't listen last week, because I do 5 shows a week, it's understandable. All it's going to take is one of these hyperscalers like Meta, Google, Microsoft, or Amazon. It's going to take some CIO or some CFO to say, you know what? We think we have enough computing power now. We're going to hold off. Or it's going to take, hey, we triple ordered these chips and all of a sudden there's a glut of NVIDIA chips. You know, what do you want to invest in? You can invest in NVIDIA. You can invest in Taiwan Semi, which are the ones making it. You can invest in ARM, which is the architecture of most of these chips. You can invest in Qualcomm, which has seen a huge explosion. They are AI as well, but their valuation's not what NVIDIA is. And I've said it before, and I posted it last week. I won't go over it again, but NVIDIA has actually gotten cheaper. And AMD said, hold my beer. AMD unveils new processors. The AI chip race heats up. It's heating up. It's going a little bit nuts. AMD still can't catch up. It previewed the 5th generation AMD EPYC server processors on track to launch in the second half of 2024. I mean, these don't come close to what NVIDIA's demand is going to be. But I do think if you can't get an NVIDIA chip, you're getting an AMD chip. So I own both. I own both AMD and NVIDIA. And AMD has seen the dip that NVIDIA hasn't. AMD is up 2%. So you're under the 200-day. You're using this to kind of just float around. The MACD isn't crazy. If we look at the weekly on this one, you're still a little bit extended, but the MACD's back down to regular times. I mean, it's high back here at, 227, and you're trading at 169. Again, I don't think that either one of these are a bad play. Stick with what's working. It's AMD and it's NVIDIA. Chip designer ARM, we talked about it. You can do Taiwan Semi, you can do NVIDIA, you can do AMD, you can do a bunch of them. One other one that I own is Broadcom. And Stephanie Link went over this one. It's one of her biggest positions. This one has quietly come into play, and it's quietly just put in a good one. Now, the algorithm has you out here. Am I getting out? No. I'm going to look to add more. Is the valuation a little bit crazy? A little bit. I mean, we can go over here to Seeking Alpha. And if you don't know anything about, say you don't know anything about Broadcom and you want to learn, well, you go over here to Seeking Alpha and you can see, I didn't want that. It's my computer is auto correcting my AVGO to AGO ago. But you come over here, the valuation a little bit nuts. Nothing else. The momentum, still A. I mean, it's still an A. This is a 10 out of 65. If you want to find other ones, NVIDIA is going to be probably up here. Taiwan Semi, PI, Impage, Silicon, FSLR, First Solar. First Solar is up here, and this chart has been absolutely crazy. And this is just demand for power in data centers. That's the only reason it's included in here. It has been going nuts. You see it here from 196 to 271. That's a crazy, crazy move. But if you want to just find AVGO and you look at that, or even the stocks that come out with it, here it is. I mean, Seeking Alpha has everything that you need to look at this. Say you want to chart this one against NVIDIA. I don't know why you'd want to do this and make yourself a little crazy, but we can select the symbols and go to NVDA. And I used to do this for free. And you don't need a Seeking Alpha subscription to do the charting, but you can do the comparisons. And you can see over 1 year, NVIDIA is blowing away AVGO. What needs to happen? Does AVGO come up to meet NVIDIA? I don't know. I mean, they traded right in line. So maybe AVGO comes up. So it's an interesting play. Again, you have plenty of AI options to play. Tesla. Let's talk about Tesla. June has historically been Tesla's strongest month since the IPO. It is. I mean, that's 14 years, so it's enough. Tesla's, you can get all this in Trendspider. The seasonality is right down here. I've got it in my bottom right. You can set up this column. But I'd argue that Tesla is seeing some weakness. And I'd also argue that Elon Musk, understand what's happening with his pay package. They're going to vote. The shareholders will vote on the pay package. If it's approved, all it takes is one shareholder to bring another lawsuit that says it's illegal to pay him that. And then you're embroiled in tons of litigation. So it doesn't automatically mean, oh my God, he gets paid. It means that there's a lot of litigation still to go. And who's paying for that litigation? It's Tesla. And who's involved in that litigation? It's Elon Musk. Does he want that? There's a reason Twitter is no longer on the stock market. There's a reason that SpaceX is not a public company. This man doesn't like that. Does he leave? That's the danger you have. As we go along here, he's fighting with the shareholders. We've talked about this range between 140 and 414. I don't know that I think it's probably more likely to get down to 100. If he were to actually leave, I think you'd see this one absolutely crash. If he were to say, you know what, they didn't vote for my pay package, the shareholders didn't do it, I'm just going to take my wares. I'm going to focus on the boring company. I'm going to focus on SpaceX. I'm going to focus on Twitter. I'm going to focus on being Donald Trump's liaison. Who knows? I mean, maybe he goes into public office kind of thing, or works as a special advisor to the president. You don't know. That's the danger in Tesla. Now, in the 4-hour algorithm, it has you in. The 4-hour algorithm has worked 117%. This is back tested for 2 years. When you get in and out, you've made 117%. If you just bought and held, you lost 32%. So you got a downward trending 200-day. Be careful. You might have a golden cross. I don't think that means anything with some of the catalysts that are on the horizon. How do I play Tesla? I buy XLY. XLY is what I've been playing Tesla with. It's one of the top holdings in XLY. You can see this has you out. The algorithm in XLY, over 2 years, you've made 43%. You want to listen to this algorithm. If you buy and held XLY, which I would tell you, you really want to buy and held, you've made 10%. I add to my positions when it tells me to add to it. Now, this isn't my favorite ETF. It's one that I have been paring back on. I'm not a huge super fan of this one, but it is interesting. So Tesla, I would argue, even though June's a good month, and if you want to trade it, have a plan to trade it. Use some of my algorithms to try and trade it. That's the way I would do it. If you don't have a plan and you just nilly-willy, I'm going to get into Tesla because the people are going to approve the pay package, understand what's going on. I'd take emotion out of it. Now, if you want to invest in CrowdStrike this week because they have earnings coming up, Shea Boulor, look at this tweet. I mean, this is just a thread, and rank them. This is a thread reporting earnings. Let's explore the competitive moats of my top 10 cybersecurity names. CrowdStrike is one of them. There's Microsoft. There's Okta. There's Fortinet. There's PanW. That's Palo Alto Networks. There's DoubleVerify. There's CyberArk. A lot of these are growth scalers like Zscaler. Just reported great earnings. SentinelOne, it was a disaster. So you want to know CrowdStrike's his number one play. And CrowdStrike is reporting. Look at Earnings Hub. I love Earnings Hub. This is my favorite earnings website to go. I don't go to Earnings Whisper like everybody else. But CrowdStrike is reporting tomorrow after the bell. And we can look at this in Earnings Hub. So last time they reported 95 cents. They beat by 15%. Estimate this time is down 90 cents. Is that good for the stock? We'll take a look at the chart in a little bit. Now, they reported $845 million. They are expected to raise the revenues. Now, when you look at Palo Alto Networks, if we just look at their biggest competitor, because I do think that Palo Alto's, this is the big boy in the cybersecurity space. It's the largest cybersecurity company. They beat by 5.6%. You can see the estimate was 1.97 billion. They reported 1.99. The expected was 1.25. How they respond to earnings? Palo Alto is the one that I have in the core portfolio. I do own both. Full disclosure, I own both of these, and I continue to add to these positions. These are not positions that I'm getting out of. Even though this is showing weakness and you're getting out with a nice 16% gain, I will be adding to this when it tells me to add to it. That is PanW. When you look at how it responded to earnings, it came down. It paired. Well, let's see how CrowdStrike responded to earnings last time. If we look in the 4-hour algorithm, it popped up. It beat and it popped up. What are we doing through this one? It's coming back to that bottom portion. If you can get this under 300 before earnings tomorrow, get it. I don't think you will, but get it. If you don't have exposure to it, I would probably at 316, you can expect it to pop to 344 on good news. You can probably expect it to go down to 300 on bad news. But say you have $1,000 that you want to put into CrowdStrike. I would buy $200 of it today. I'd just buy $200 of it. And then as you see it move with earnings, you can add the additional ones later. We saw how PanW blew it away, 5% above. And look what happened. If you bought everything right before earnings and you bought right there at 314, you're not real happy right now and you didn't pop up huge. So why would you think that CrowdStrike's going to be any different? Again, you have to understand that these are names that, yes, you want to hold in a long-term portfolio, but if you're looking to trade them, that's the way I would trade it. Just make sure you're entering in. Now, one that I find interesting, Foot Locker's earnings came out last week. And they were fantastic, by the way. I mean, we can look at Foot Locker was up 7% on Friday. It's up 1% in pre-market. I would argue this is an interesting one for Nike. And I say that because Nike's been beaten down. But they talked up Nike on the call. And so, while we look at Anon and we can say, hey, Anon's in a good trading range there and it's at the upper range of its trading, look at Nike. I mean, Nike here has put in, I'd say 88 has provided a pretty good support where if you wanted to put in your stop loss at 88, that would be where to go. But that $91 right there, and we have confirmation and we have strength. Your 50-day is starting to move positive. If you look at the weekly on this one, this has been a super, super weak stock. Now, I don't want to sugarcoat this one because the fundamentals do support that this is just something that you want to trade. It's not something that you want to own. If we go over here and we look at Nike in the quant in Seeking Alpha, the momentum sucks. The momentum C-, the valuation's an F. And it just ranked 8 out of 9 in footwear, consumer discretionary. The valuation is still very high. If China picks up, Nike comes back. Foot Locker, Dick's Sporting Goods, they're all reporting that Nike is selling well. But it's not enough. China has slumped on this one. If we look at the growth rate on this, you can see what's their revenue year over year? It's 1.89. That is crap. Look at the sector median, 2.23. If we go and we look at Anon and you look at their year over year growth, look at that, 33%. If you go and look at DEC, which owns Hoka, Deckers Corporation, and we go and look at the growth over here, you look at this one, 18%. Again, Nike is there for a reason, But I think it's an interesting trade, again, with Foot Locker's kind of a push there. And read that article. And On, we can talk about On all day, but On, it's at $42. I mean, God, it's a monster. If you're holding at these prices, I'd probably be taking some profits, but that's up to you. Boyle, European gas jumps to year-to-date high on unplanned Norwegian outage. Norway's massive Nyama gas processing plant, they slashed the flows. Boyle. Again, Boyle, if you want to trade it on the 65-minute algorithm, the 4-hour algorithm, it's a bit tough to make money on the 4-hour algorithm. You can see weakness got you out here with a 15%, but you had a nice 18% up play in there. If we go to the 65-minute algorithm and we look at this, understand Boyle is a decaying asset. So this isn't one that's investing in natural gas. This is investing in the futures, and it's a decaying asset. But you can see right here, this is a nice, you got in at 1644 and it's up here at 18. Algorithm got you out there. So the MACD is far enough low. Let's go to the 5-minute. And where does the A plus setup get you in? Let's take a look. And the A plus setup, I don't worry about back testing it. I worry more about getting in. And you were in here at 1602. You're not in for this run. So I'd probably stay away from it. Honest to God, that's the way I would be looking to trade something like this. I would say, you know what? Boyle may have had its run, but on the 5-minute, it says to get out. I'm going to look at the chart, and I'm going to look at it in a 5-minute chart. And if you look at it in a 5-minute chart, you can see if we add non-regular trading hours on this 5-minute, and we look at that, if you're above that 9-day, I mean, look at how good above that 9-day at 1784. And then when you touch that 9-day, you get out at 1848. And now you're above the 9-day and the market's just opened. You'll do fine there. You'll do perfectly fine there. So again, you want to learn how to trade these things. And I think that's the way you really look at it. So Boyle, interesting move if you want to look at it that way. Now, there's rumors. NVIDIA looks like a good bet to replace Intel in the Dow. This would be bearish for... hold on one second. And people, I'm not going to edit this out. Daisy, stop crying. You don't need me to get you under that blanket. So, I love these two, but man, they cry. NVIDIA looks like a good bet to replace the Dow. Before you think that this is automatically bullish for NVIDIA, let's take a look at the last one. The last big software kind of AI name that got added to the Dow was Salesforce. And who did it replace? It replaced XOM. I'd say that, replacing a chip for a chip, probably similar. And yes, Intel I don't think has a big time, but this was August 31st, 2020. I took this chart and I've moved it. I can chart this from the exact date. CRM down 14% since it was added to the Dow. S&P, you're up 50%. XOM, you're up 193% since it was taken out of the Dow. So don't automatically assume that NVIDIA is going to soar because it gets added. It's likely to soar because of the fundamentals, but it's unlikely to soar just because it gets added to the Dow. The Dow is only 30 stocks. Intel is in there. Intel has been holding the Dow back. I do believe that NVIDIA is probably a better choice for the Dow, but this chart tells it all. Don't automatically think, it's going to be added to the Dow. It's going to fly. It might not. Seeking Alpha asked their analyst, which weight loss stocks should investors be watching? This is a great article, a fantastic article. We talked about it. It's an AI and GLP1 market. That's a great article. It will be in the newsletter. Now, this video, I got responses from this video from Ross. Do you know how to avoid false breakouts? In this episode, Ross goes over how to avoid. We talk about the confirmation, and you can see even on this chart, there's confirmation there. Well, we have confirmation there. Should I get out? Yes, you should get out. And then he goes over, there's the confirmation there. Would you get in? Well, there's confirmation. He goes over why that's actually not a good idea and why historically, from a mathematical perspective, why you may not want to do that. And again, he goes over it. He's a way better teacher than ever I could ever be, blah, 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 the whole thing. Okay, let's go over some social requests here, and that Zoom is about a scan, so we'll get to the scans. Hey, Gary, what are your thoughts on Southern Company as a long-term investment? So this is a utility. This is from Matthew Russell on Facebook. I am not a huge fan of utilities, but they've been outperforming recently, and that's because they're so far down. If you take a look at the weekly on this one, this is why I don't like utilities. Look at this, goes all the way back to 2020. Now, you were trading in 2020 at 57. You saw some, but you see some huge swings in this. Utilities are regulated to the point where they can only make a certain amount of profit. So how do they return that to shareholders? They actually return it via dividends. So you're making money on the dividends. If we go over to FinViz and we look, because FinViz is free, not everybody has Seeking Alpha, so we'll look at this in FinViz. Market cap, $87 billion. Cash on hand, 74 cents. They've been spending money on some of the utility stuff. Utilities are decent because we're going to have an explosion in data center. Energy is going to be used. Where are you going to get that energy? Well, it's going to be utilities. I'm not a huge fan of utilities in that sense, but it probably irons out there. You got a 3% dividend. Year to date, you're up 14%. Over 1 year, over half a year, you're up 14%. Performance for the quarter, you're up 19%. The PE's 20. It's not crazy for a utility. Average price target 77. You're trading at 80. So I don't know that I love it. Now, I will tell you on the 4-hour algorithm, it just got another buy-in here, and it shows up on our scan list. And so, Matthew, you asked about it at a pretty interesting time. It got you in here at $80.15. Do I think you should? I don't know. That RSI is at 60. It's coming off there. You saw how it trades in that big range. The MACD crossing up. If we go back to look at the weekly on this one, you've got to be worried that 80 is your double top. So I would probably wait. If it holds 80 over the next couple of times, I would absolutely think that, yeah, you can buy it and 80 is your support. Right now, I would look to that as resistance. I would look to 80 as resistance. I'm just not a big fan. Matthew, utilities are for people that need income. And so if you need income while you don't care what happens to your actual capital and the dividend comes in, remember, the dividend's a percentage. So at 3%, if this dips down to 40, you're only getting 3% of 40. If it goes up to 100, you're getting 3% of 100. But that yield that is there, it's just a percentage. So they've got to keep that up. I don't expect this one to fly. If you go back to pre-pandemic, let's just go back to pre-pandemic. This was a $69 stock. What's changed between now and then? I mean, look at the run of the utility back then. It was running up. I mean, that was supposedly a bubble. But, again, COVID took it down and we came back. But I just don't like the chart. I don't like the investment. I'd probably work on it. Charles, hey, I was looking at the live stream on TQQQ and the algorithm on when to buy. Very intriguing and definitely made me more interested in buying Trendspider and getting your algorithm. I mean, let's just take a look at TQQQ. We can take a look at how good that one on Friday traded on the 5-minute algorithm. And remember, it's more about the entry and less about the exit. So what I'd like you to do is find the entry for this and then find the exit. And the entry was at 59.47. Would I have gotten out there? Probably I would have gotten out there with a 0.39, and waited. But then you noticed, and what do? You just buy back in. Again, the entry was really 59.47, and it got you up here. You made a nice 5-6%. But you want to use that 9-day as your stuff. If you're still sitting in TQQQ and you just bought the dip, you're up 8%. I mean, that's a pretty good, again, the exit is what I want you to not focus on. I want you to focus on solid entry. That was a solid entry. Now, did you get nervous? Absolutely, I would have gotten nervous. I would have taken profits here. Would I have bought back in here? Absolutely, you have confirmation. I would have bought right back in here at 60, and you rode it all the way up until 62. So you can use the A plus setup, even though it doesn't get you in. You can still use this and say, you know what? I just had a winner. It's probably not a bad time. Now this one, you got out with a loser, but you shouldn't have gotten out with a loser because you should have gotten out with a slight loss, but then you add it back in. So the entrance on this, I really like. I think it's a good entry. I just think the exit is what you have to worry a little bit about. So Charles, I commend you. I think you should buy Trendspider, but again, I'm probably biased in this one. If we look at TQQ on the 4-hour, and I always say that I think if you invest in QQQ, you look at the entry on TQQQ over 2 years on the 4-hour algorithm. Look at this one. Makes you 94%, 23 positions. So once a month, it gets you in. Once a month, 23 positions, average win 18%. Look at how weak it is now, but the algorithm didn't get you out. You could have gotten out. You could have gotten out with a nice, what? Let's look at it right here. If we're looking at an average of 18%, well, that's 19%. So you absolutely should have gotten out. Will you buy it back in? Probably. You should. Once that MACD crosses up again, I'd say you buy back in. But what we're looking real high right now on TQQQ, so it's a little bit different. But again, Mohammed from YouTube, GCT, buy and hold, please. He asked the question. This is what I wrote back, and I'll copy the screenshot in the newsletter. This is a buy and hold. GCT is absolutely a buy and hold for me. And the reason is I bought it because of Seeking Alpha picks. Now, Alpha picks, it's a 2 stocks per month. They're going to announce their new one today because it's or they announced it first of the month. I didn't see what it is, but they will announce it. It's 2 stocks per month. You don't have to buy it just because they announce it. You look at the chart and understand that if you want to buy it, you can buy it. Their performance is unbelievable. This was why I bought GCT. This is not a trade. This isn't something where they get in and then a month later they get out. If the fundamental and the stories change, they tell you when to get out. They are still in. I am still in. It is up 5% today. I'm not sure if it's for Seeking Out Premium members only, but there is a Zoom meeting with the CEO. So if you go to seekingalpha.com, you can register. I don't know that you need to be a Seeking Alpha member, but you can register. They're having a meeting with the CEO of GigaCloud. That's it. So what I wrote back to Mohammed, I'm holding shares at 40. I added to it in smaller increments. The valuation is not crazy. Again, the valuation is not crazy in this business. The reason you're seeing dips in this business is because short sellers release reports. That's it. There's no change in the story. And they constantly, with their earnings, put it out that they haven't changed. The short sellers are crazy. That's what the meeting's about. This is the second short report. There was one that was reported here back in March. Boom, it went down. Alpha Picks picked it after going to visit their warehouses. So what's my story? My story is I bought it because of Alpha Picks. I didn't load up on this. I added quite a bit. I do have a 5-figure position in this one that I'm down on. Am I worried about it? No. It's because of the way I bought it. So Mohammed, if you bought this, you have to ask yourself, when am I getting out? Now, my get out, 25. Because below 25, I just don't think that there's a lot of support. I'll get out. I'll take that loss. I may wait 30 days and get back in. This company's a good company. The fundamentals do seem to be there. It's just, is there something that we don't know? But my only guidance would be, why did you buy it? Was it the technicals? If so, you should be out. Was it the fundamentals? If so, nothing has changed, so you should still be in. Was it a short-term buy? If so, you should be out. Was it a long-term buy? If so, simply hold and wait for more information. It's a tough one because it was targeted by short sellers. And you can't argue with a lot of their stuff that was put in there was factual. But there's a lot of kind of hidden stuff. Remember, this is a B2B business where they ship large merchandise materials. So it's not something that, website traffic, which they knock as, low website traffic. Well, in a B2B business, you're not going to have big website traffic. So, it's just, it is what it is. But GCT, I'd say you go back to why you bought it. You don't, Alpha Picks, when Alpha Picks tells me to get out, I probably will get out. At that point, they know better than I do. I did follow them into the trade. Why did I follow them into the trade? Because of the performance. How do you get involved in Alpha Picks and how do you find out about them? You go over here to my link tree, and it's the third link, Alpha Picks. You want to beat the S&P? Look, they clearly beat the S&P with 2 long-term data-driven stocks, and they do research. You get access on day one to the research that they have. And if you don't know anything about fundamentals and you don't know anything about actually looking at a stock from a fundamental, meaning earnings and things of that sort, this is the program for you. It's $449. I save you $50 with that link. Now, Bullish Bytes posted on Reddit. They like Hood to be at $25 a share by the end of the week. I tend to agree. I mean, here's the thing with GME going crazy. There is no support, by the way, for 25 to get up there. I think they posted on Reddit a chart. So you can go to Reddit and take a look at their chart. What I will tell you is Bullish Bytes was super, super timely in promoting Robinhood and saying Robinhood is a buy. And they did it down here at about 16 before it popped. Right before earnings, they said it's at an absolute buy. And I give them credit. They knew something. Again, I'm not a big guy on Robinhood. I think they effed up the first one. When you look at their earnings, and we pull this back to, well, their earnings are right here, the pop here. They promoted it right before its earnings at $12. And they've been right. And you had a nice 74% gain right there. 74% gain in the algorithm. Now, it was capitulating here, so you had some ins and outs. But again, 1835, you can't argue with this one. The algorithm back tested for 24 months. You make 196%. 24 months if you bought and held, it's a measly 112%. So this one has been a rebound king. Now 26 positions, so just a little bit more. Your average win is 18%. If you get to 25, and we just go to 25, let me just get down. I got to pull this down a little bit to get to 25. There we go. So if we look like from 1835, and we're going to get up here at 1835 and say 18. Your average win is 18%. If we get to 25, then that's a 37% gain. I would argue that's too much. I would argue that at 18%, your average win, you'd want to be out at 21 where you're trading right now. I'd argue that. I may be wrong, but again, the stock market it proves everybody wrong from time to time. Not anybody is perfectly right in this one. But with Roaring Kitty and the huge options play on GME, right now, I mean, we can check on GME. I think that goes right along with Hood. I think at some point in time, you might hit. You very well might hit. Now, GME has pulled back. It has pulled back to 33. This was it got up to like 70 in pre-market. Let's go to the 5-minute and look. The 5-minute actually, I think, saved you from this one because it got you out with a 74% gain, and it hasn't gotten you back in. 76%. This one went all the way up to, looks like 47. You're trading at 32. Super high volume. I mean, just look at that volume, that pump. But everything is going down. So I do think it's an interesting one with Hood. But still, would I get involved in this one without a plan, without some type of chart knowledge, without some type of algorithm about an A+ setup? Absolutely not. Absolutely not. Now, scans, we can talk about scans. Exxon, this is an interesting one. It's butted up against 120 a couple of times, and I've talked about that 120 being a resistance level. Even though you broke it, you didn't hold it for very long. And that's the problem here on the 4-hour is you haven't held it very long. Oil should get a pump. It's down 1% today. You'll see in the newsletter, there's a ton of energy stocks that we trade. There's leveraged ETFs. There's a ton of stocks that get buy-ins today on the 4-hour algorithm. And I list them all. I list them all for free. It's dailystockpick.substack.com. They are 100% free. This post from Friday, where I said, hey, as I write, we've broken 450, so we've lost that support on a candle, but it really depends on where the rest of the day shakes out. I said on the podcast, I thought afternoon was going to be pretty solid. Since Friday, let's look at the weekly. You can't ignore the long-term trend, which remains intact. The 50 period and the 200 period is still positive. Showed it at the beginning. And you can watch trading this live one on TQQQ, which I did Friday. And again, post in the links to get all of that stuff. This is Trump. There is no way Donald Trump will be found guilty from Jim Cramer. That was his nail in the coffin. But again, you scroll down here to the bottom, and I have scans. And these scans are entries into the 4-hour algorithm. Now, the 4-hour algorithm doesn't work on all of them, but I'm just showing you the scans. If you get the 4-hour algorithm, you can take a look and you can see. Now, here on the algorithm for Exxon, it makes you 4.4%. If you just bought and held, you're up 19.4%. I would argue you want to listen to the 4-hour algorithm because it's still positive. But I would say your cap right now, if you bought in here at 115, your cap is 119. Is it worth it? Probably not. Wait until we hold that 119 because your cap is right there. But it's still bullish if you want to hold this one long term. I don't think energy is going anywhere. I think you're fine in energy. In fact, one that I personally own is Occidental Petroleum. The reason why I own this one, Warren Buffett owns it. Has this one done anything for the past couple of years? No. This is clearly one where you buy it under 60 and you sell it over 60. Now, did I sell up here at 68? No. I haven't touched this one. I haven't done much. I've just been a little bit disappointed in it. When you look at the weekly, take a look. I mean, it's just sideways since May of 2022. It's just sideways. That's it. This was when Buffett first started buying. When you see this March 7, 2022, he started buying in the 40s. And he started adding to it, and he's been propping it up. It's a big position for him, and he hasn't sold it. We can look at Cleveland Cliffs. This is the core portfolio. Cleveland Cliffs, don't sleep on this one. We're in this trading range, and we've gone over this on the weekly, this trading range of 13 to 22. If you want to buy it here at 16.94, I don't think it's a bad buy. At some point in time, you come back and you fill this gap at 20. At some point in time, the weekly clearly shows these channels that it's trading in. Now, you're right at the 200-day. That's provided support. When you've bought under that 200-day, take a look at it. Coke, I've said this before. This is a buy below 60 and sell above 60. It's at 62.93. It got another buy in here at 62.96. You had this nice 5% gain. You could have made more. You could have sold it, up here at 63. But this one is a buy. If you take a look at the weekly on this one, it is a buy below 60 and sell above 60. And ironically, that's where it was at right before the pandemic. It's a $60 stock. There is support for that one. We've got ITB, which is a home builders ETF. Devon, GCT, Etsy, BRK.B, Berkshire. If you just want to follow Berkshire and get your exposure to Oxy in there. Home Depot, JP Morgan. There is a ton. Energy, a ton. There's a couple of leveraged ETFs, and one is MagQ, which is Round Hill's Magnificent 7. It's I think it's a triple levered ETF on this one. 2316 doesn't have a ton of back testing. It's only been open for 92 days. 92 days. But algorithm protects you a little bit. Just be aware that's probably got some issues with actual fulfillment because the float is rather small. So get out when you can. It's probably highly traded. Direxon Home Builders. This is a daily, triple levered, I believe. I'm not sure. But the home builders, 110. This one makes you 155%. And it's a leveraged ETF. This is a leveraged ETF. And it's a daily. So it recalculates that percentage move every day. So it's not one you want to hold on to, but solid performance, 155% over 24 months. 169 if you bought and held, but who's buying and holding a triple levered ETF every day? Just play it the way you want. Remember, go to support the podcast. Trendspiders here seeking Alpha Premium or Alpha Picks. You can also sign up for Webull, get 75 free stocks there. It's the best mobile trading platform that I've used. You got the newsletter right there. You've got Visible phone service. If you're paying anything more than $25 a month, you can save $20 off your first bill. AT&T refer a friend. I give you $75 if you sign up for fiber. Savvy Trader, we talked about the core portfolio a little bit. Core portfolio down here is, you can follow it. YouTube, if you want to see the live stuff, it's a lot longer version, about 2 hours. The curated podcast is about an hour a day. So if you have any questions, hit me up. Again, my email's there. All of the socials are up here. You can send me an email, send me whatever you want. Okay, take care, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.